So actually, maybe just to start and carry on that introduction a little bit, we could just start with you, Astorre, on my left, and go forward. If you could just give a moment or two about what your role is and maybe what your focus is from an early stage investment perspective.
So we're a seed and early stage investor in Israeli companies. We started in 2007 with our first fund, invested in 9 companies, from most of them, 7 of them actually seed investments. We've now at the second fund, we are partly raising the second fund, already did the first closing, 20 million. And the second fund has also an incubator. We just won a license from the State of Israel program to run an incubator where the government gives you $5 per each dollar you invest at the early stage, so it's a very attractive incentive for us. We do mostly energy investment, very capital efficient, quite a few energy efficiency investment, and we're trying also to push a little bit more the clean web or green IT solutions, but we also have some nice normal hardware solution in our portfolio.
Great, thank you. And Jin Yi, what's your focus there at Keystone?
Keytone Ventures is a early stage technology venture firm based in Beijing. Our investment, right now we manage 2 funds, total size for 20 million. We allocate about 1/3, at least 1/3 to cleantech investment. Our cleantech investment taking a approach in terms of horizontally, we invest 2 opportunities. Number one, any of technology or any sector can see taking China as a operation or manufacturing capability to enable the making cleantech product economically viable. That's one approach. And second approach, we take any technology, domestic technology, China domestic technology, or overseas technology, can leverage the China cleantech market potential. There are lots of potential, environmental technology, there are some panelists mentioned in the morning, there are lots of potential in China. So we particularly like overseas technology to apply the large potential of cleantech potential in China. That's kind of a horizontal approach, but that has to couple with vertical domain knowledge. For certain sector, we only focus in few sectors. LED, water treatment, EV, and some other sector.
Great, thank you. Jin Yi, Adil, how about you? What's your focus area?
Okay, so I'm part of these technology or R&D organizations. So what I'll try to give a perspective on is how we approach early stage companies from a technology perspective, what's important to us, what kind of adjacencies we look for when we evaluate these companies. And I think in your next session, you have one of my colleagues from the capital side who will now be talking about what capital looks for as well.
Let's hope your stories match up, shall we? So maybe we could start with you then, just kind of from an overall maybe process perspective. It's a good place to start. I imagine in your role, you're looking at early stage opportunities coming left, right, and center all over. Is there a process that you have in place to kind of vet and put these through a triage to validate, which kind of float to the top and which, you're not going to waste your time on? What sort of process does that look like with your firm?
Sure. So to start with, on our technology staff, so that means reporting into the Chief Technology Officer of the organization, one of the people on the staff is who we call an advanced technologies leader. Now his role is to look globally at different companies / organizations which we can either participate with, which we can collaborate with, or which we can partner with to bring new technologies to fruition. And I'll give you an example in a second. But basically what he does is, he's based out of headquarters, but he has a bunch of people, including one of the people in my organization, who are technology scouts for the different regions. So there's a technology scout looking at what we call Eastern Asia and Australia. Then there's someone else in China, there's one person in India, there's another person in Europe, and one person in the US. So all of these people look at different opportunities globally. Now once an opportunity or a company is identified, that goes back to the functional technology leaders. Now when I say functional technology leaders, It could be, for instance, for flat sheet membranes that are used in, in water purification, or electroseparations, or energy efficiency in terms of water purification. So those have an associated functional technology leader who leads that technology globally for GE. It would go to that person and their organization. They would take a look at it and then come back to my colleague and say, okay, from a technology perspective, this is adjacent, this is probably worth doing. And that's where we start looking at the economics. And that's where we get joined by our colleagues from GE Capital. Or if it's closer to the business, closer to a product that's going to come out soon, the business itself might decide to put in some money.
Sure, sure. So how does that differ, Astorre, from your side? I imagine you're casting the net quite wide as well, looking at opportunities in different sectors, different geographies. Is there an internal process you use to kind of validate early stage opportunity?
Well, first of all, we're quite focused on Israel, so we cast a little
Not
bit,
so wide.
Not so wide.
But maybe wide
net.
by industry then.
Right, but actually it's interesting because at the beginning when we started in 2007, we were very proactive in looking for deals. And a few years after, we basically almost stopped the deals coming because we're having practically almost 2 new deals a day coming to our emails in just from Israel, just in our sectors. So Israel is extremely innovative and entrepreneurial. We have almost to stop the people coming to us. So of course makes a lot of burden in terms of us filtering the actual deals, but we have now a team of 9 people overall between the fund and the incubator. And so we have, first of all, about 70-80% of the deals are pretty much judged just by the initial document. Also, Israel is a very small country, so we know most of the people, and we can judge from the people that are involved in the deal if it's an interesting deal or less. And then we have, the usual process which most VCs have.
Sure.
We actually have a very good relationship, for example, with GE in Israel. GE in Israel is very strong, so we kind of show them deals that are interesting to them, and they give us feedback on the due diligence side. So we try to really get, as soon as possible, the companies in front of potential customers, buyers, so that we can have directly the market see of the thing. And we do also a lot of the technology side. We're quite good at technology ourselves.
So, Jin Yi, how does that kind of experience compare to China, where he's getting 2-3 deals in his mailbox every single day, doesn't maybe really have to go proactively look so hard for deals? Do you have that same experience in the China market, or do you have to go actively search for deals a little harder?
I think kind of both. Our approach kind of combine the previous two, right, in between.
You're sitting in between there.
So as I said, we couple the certain vertical very, very actively. For certain sector, we put a priority. We put a lot of resource and time to look at the sector itself. So basically, we make ourselves become a industry insider, but definitely not as compared with GE, far short from that. But we ask ourselves become an insider of the industry, and we found many good opportunities coming from the experience working with industry people. And even sometimes, I put the term of incubation, but the company is still, but in terms of making the right product and right direction, we work with company, for quite a long time.
Okay.
Couple of deal we invest, we work with company, sometime around 2 years before we make the investment.
I see. Well, actually, you bring up a good point, and that's kind of defining exactly what is early stage, and when does early stage become growth, or when does growth become late, as an example. But one question I had is, as it pertains specifically to the clean tech area, clean tech over the past few years has kind of changed its definition dramatically. Whether it was just focused on solar a few years ago, now it's everything from waste recycling to printed flexible electronics to water membrane technology to efficient building systems and window film, et cetera. Is there still, well, I assume I know the answer, but what sort of play is there for the early stage investment in clean technology? Just to take that one step further, some areas of clean tech are as we know, super capital intensive. If you're retrofitting a factory, for example, it's not, as we heard from the presentations this morning, this isn't a 1 or 2 year conversation. This is you're getting in bed with someone for 5 or 10 or 15 possible years on a particular deal. Does the early stage deal still exist in the clean tech space? What is that? Has that changed a little bit as we've gone, into clean tech in the past few years, or do we still have such a thing as the pure early stage deal in the clean tech space? Jin, do you want to take that since you were warmed up from the last question? Well,
let me take a shot. But,
all right.
It's a very broad question. Early stage, again, back to my point, we only focus on few sector, but for those sector, some sector definitely has a heavy technology content, which is any revolutionary technology or even disruptive technology in terms of economic value has an opportunity, but put in the framework of it's capital intensive and a long ramping time frame that will create a lot of challenge for the start. So we put different definition on the early stage. We are not play the language game, but for example, one company we invest called Nano H2O is a water membrane company. They do ROC water desalination membrane, and I named that a early stage. Actually, we invest in Series C because it's at the time it's about to start the commercialization period. The company take 5 years to 5 years during the time we invest, work out the technology, but the sector itself, even has a lot of technical content, is a manufacturing business. If they are not at a stage ready for manufacturing, it's an early stage. And at that moment, we decide we invest, we help them, build up operation in China and run our company in the red path.
Sure. Maybe we'll turn to you. I mean, GE certainly is not afraid to tackle capital-intensive projects. Is there still a perception of early-stage investment for you?
For us, the paradigm is a little bit different. Where we would look at it is where the technology is vis-a-vis where we are. Is it something that's either adjacent to what we are doing, or is it an area which we want to get into? Because for a company as big as ours, we have to be very careful about which areas we get into and which areas we stay out of. So that's typically the decision that's made. And then the stage of the company clearly has some impact on that. I mean, if it's something that's clearly built on a good business model, that makes it easier for us to make the decision. But there have been instances where we have found that the idea is really good, but they are just not able to take that idea to fruition because they don't have the commercialization experience, they don't have the engineering experience. So there have been instances where we have taken, for instance, very recently we have taken an energy efficiency system for water treatment and then actually converted it into a scalable model which can actually be out there as a product. So I'm sorry, I don't have a definitive answer. The answer is depends.
Yeah, depends, sure. Well, so maybe a follow-on question would be, and again, if you can't answer this, I understand, but is there a company culture or a corporate culture that has an affinity to early stage deals, or there's a preference to later stage deals, or it's really agnostic and that you're open to any sort of deal? Let's look at it. But I know in some conversations I've had with large MNCs, there's definitely almost every time there's a preference towards one kind of deal type towards another. Do you run into that?
Well, I guess GE is broad enough and big enough that we do both.
Right.
And from GE's perspective, like I mentioned earlier, it's more about how that deal would fit into our overall perspective or our overall strategy. Then if within our overall strategy this makes sense, we do it even if it's early stage.
Sure.
We might not do it even if it's late stage, so again, it depends. And it depends because GE is so broad. If you look at the water business versus the power business versus the oil and gas business, to name a few, each of these will have their own metrics based on where they are in the scheme of things and the strategy of that particular business. So there's no one size fits all.
I think the second is that is the technology innovative enough? Is the market potential big enough? These are typical questions. But I think also in the cleantech space specifically, and we touched on it a little bit in this past few minutes, does the business model make sense in terms of capital use? I think a lot of the deals that were funded in the past 5 years, from the very beginning, required a huge amount of financing, and they were very difficult to return the money after you invest like a few $100 million. And so I think that another criteria on top of the usual criteria are really, okay, can we get to a significant milestone with, in our case, it's actually $1 or $2 million, where we can see either getting to market already or getting such a high level of milestone where we can get additional money into the company. And we actually do not invest in anything that requires more than $20, $30, $40 million to get to market. So that's our criteria, and I think it's actually, if you look at the deals that were done in the past year or two, it's very clear the trend that the number of deals has not gone down so much, but the actual $1 million per deal has gone down significantly. So I think everybody's actually going into more the capital efficient, and also even not the capital efficient, but just giving less money and focusing much more the startups into sectors that can get to market quickly.
Jin Yi, what does that look like from your side? Are there specific metrics that you look toward?
Well, I echo completely with the previous panelists. Team is number one. It has to be, cleantech has require very deep domain knowledge. You have to understand the vertical itself. There are certainly some cross-border, the overlap experiment that's important, but domain knowledge is the key. Certainly, we also look at almost the same with everyone else. We look at good market, good technology, which can enable good value and good scalability. That's particularly meaningful for many cleantech verticals.
Anything to add on your side?
From a corporate perspective, the way we look at it is this an area which we are also working in? So suppose someone has some neat technology. Where are we in that stage of development? Are we pretty far enough along that this will really not help us? Or have we been struggling on that side and this is a great new idea which we can incorporate in there? That's clearly something which we would go for from a technology perspective. But also, to give you an example of, say, an academic discovery, which is increasingly happening in many universities, prof and their team would come up with a particular idea. It's much easier for us to make an evaluation if they have taken the next step. And many universities do this very well these days. They have a commercialization office. They'll work with the professor or the researcher, and they will put together not only the technology team over there, but they'll have a couple of people who are making the business case for that particular idea. And what's the multi-generational path for that particular idea? So when we see that that has been done, it gives us a little bit more confidence, clearly.
By the way, I just want to add something. We talked a lot about technology here, but I think if you look at the last exit that were done in the market, I think it's not just about technology. It's a lot about the business model. So if you look at SolarCity, for example, and Zipcar, some of these companies have actually not invented much in terms of technology, almost zero, but they have actually innovated a lot and executed greatly in terms of business model. So I think when you look at cleantech deals, I think these are the two potential, and we shouldn't just focus on the technology innovation, which of course is very important as well.
Observation. I guess I was a little bit surprised to hear from most of you that it was all about management, and not necessarily about technology. Maybe it's a little different than on your side at GE, where I imagine you must have circumstances where you find some great IP, some great technology, but the team behind it, compared to GE, may be lacking. So that's probably a different type of conversation that you would have, I assume?
Right, so then that's a great question. What we do in that case is we take a look at and we make, it's all risk management at the end of the day, right? No matter whether you're looking at technology or the economics. So what we do is we look at that particular team and we look at what they bring to the table, and we take a look at what are the gaps for GE to come up with a product based on this technology. And if that gap is too huge and it'll just take too long for us to make that up, then we would be a little bit careful. Maybe we would put them on our watch list. Maybe we would sign a joint development agreement with them if it makes sense. but we would probably not participate straight away in that particular company. While if there's something else where we feel that, hey, these guys complement something else which we are doing, which we are strong in, like they might be really good on the science side of it, and we have something on the engineering or technology side of it which will bring a product into market real quick, that's something which would really suit what we would like to do. So.
Out of curiosity, if you kind of look at the spectrum of deals, is there a percentage of deals that are, clearly, strong management-led kind of conversations versus, 15% of deals that are, no, we're just only interested in the technology or the IP? Is there any?
I'm the wrong guy to answer.
You're not, okay, fine.
I'll be honest.
Fair enough, fair enough. So as we're in Singapore and kind of tying this together with some of the keynote presentations from this morning, a lot of the presentations were either about how strong Singapore was in terms of facilitating and encouraging startups in the clean tech space, or we had another speaker from Canada talking about the Canadian experience and the benefits afforded to investors in that market. I'm curious, for the early stage investment opportunity here, what role do you see, if at all, government playing? Is it, in some of these very emerging areas, is it playing a central key role in terms of, bringing further benefits or advantages, or does it not play a role at all? Maybe we'll start with you from your experience in Israel.
Well, in our case, it's actually a central way in terms of our early stage investing. Israel has been, the pioneer in helping early stage companies almost for 25 years. With the incubator program, which we just won a tender for. So I think that they're very good at actually bridging the initial gap, the risk, which is very strong at the beginning. What they actually changed a bit the model lately, and they give you the money at the beginning, but they want you to be able to actually follow on the investment. Because they realize that there is a big risk at the beginning, but there's also a tougher zone where there is the famous valley of death, where companies actually get to the beta and that they don't have enough money. Of course, the money requirement is higher to pass that to go into commercialization. And so they actually require us to have already the very small initial money for the early stage, but also to go and continue the money. And they also have significant programs now to match funds at a little bit later stage to really go through the thing. Of course, the level of investment the government gives is lower. So at the beginning, they give you 85% of the budget, then it goes down to 65, then 50, and then about 30, 40%.
I see.
So it follows the level of risk, but it's a great way of helping. And I think that the main criteria for them is to let the market decide which are the winners, and then they'll match what we decide will be the winner.
Sure.
That's, I think, a key thing for any government to get into.
And I assume they choose the sectors or the industries.
No, actually, in the incubator level, they don't decide a sector.
Really? Wow.
There is one specific for oil dependence reduction, which has a different program, which is on top of what we do.
Okay.
But at the level of the early stage, they don't even select. I mean, you can select. They might give a little bit more to, for example, to pharma because it's a little bit more, needs a bit more money. But they don't actually select. They let you select even the sector.
Interesting.
In this case.
Interesting. Jin Yi, how about for the China perspective at Keytone? Do you work with?
Our experience in China, I think, talking about incubation and also government support, we see that's a huge support from the government. Chinese government, from central level to local level, the incubation activity is very intense. I use the word intense. There are most of the local cities, they organize certain incubation program. They certainly want pick certain industry, but broadly they open to any opportunity, technology focus or business model focus on clean tech front, or certainly they also support on other IT front as well. Another role play, I think very important for clean tech sector in China is the policy, on the policy front. Certainly the Chinese economy has relied on the government for a long time. It's a planned economy, but even it's more market oriented. But most of the sector, particularly for clean tech, the government policy play a key role. EV is a big example. They want to lead the industry towards a certain direction, but over the time they learn the lesson. EV is one example. LED follow and some other sector. But you know, they know gradually they know how to be a referee instead of someone running in the track. You know, they gradually learn that. I think you know all the time we also want active play in this circle to influence the policy.
I'm curious, just compare that to maybe the U.S. experience in China. Is there the same level of kind of entrepreneurial culture, startup mentality there? And I assume it's quite strong in Israel as well. In China, is that growing?
I think Chinese by nature they're very entrepreneurial, but in terms of technology entrepreneurship or the high tech or in certain sector they are definitely far behind U.S. in terms of innovation. I'm talking about innovation. But there are a good mix right now. People come back from overseas, and also the domestic innovation. That's over the past 10 years. I think the momentum is quite good. Okay. If you look at Taiwan in 20 years, before, that's what happening in China now.
Sure. So I see we just have about 60 seconds left. Maybe we could just kind of go around and give 10 or 15 seconds of advice for those that are looking to play in the early stage space. We could start with you. Is there kind of any last words of guidance or wisdom for those who are looking at early stage deals?
Sure. One of the things I would mention is definitely think about where this technology would fit in terms of an actual product that goes out into the market. Now, when I say a product, it could be a service as well. It's not just a concrete product. But one has to have a vision of how the discovery goes to an actual product. If you have that worked out, it's much easier for someone to make a business case.
Jin Yi?
I think in general, I think this is a particularly good time for either wants a startup, a cleantech company, or invest in cleantech sector. I think this is a good time. Even many people are very negative about the sector, but I think this is the best time.
I think it's a good time, but I think everybody that opens a startup has to think as if there are no incentives out there. And just does the business that I'm starting now will make sense in 3 or 4 years, where no solar incentives, no wind incentives, because with all the debt that we have in the global market, I think that's going to be the case.
Great. Well, thank you very much for participating in the early stage panel discussion, and please join me in giving a warm welcome and round of applause for our speakers.